Okay, we will start with euro dollar because we got this nice upswing on euro dollar. The price used the neckline of the inverse head and shoulder formation here as a support. The price used also 61.8 Fibonacci and also used the correction equality pattern. So that correction was almost 250 pips, and that correction was 250 pips as well. Well, if you do not believe in the correction equality pattern, I will show you a few examples today that when it worked. So at the very beginning, a few years ago, I wasn't a firm believer in that as well, but I added that to my trading techniques because I do see a potential there. And I saw many trades, many market situations where this worked, and this worked perfectly. So I'm a big fan of correction equality patterns, obviously not as a single signal to open a position, but as a combination of few factors. So here we had this 61.8, we had this horizontal neckline, and in addition to that, a correction equality pattern. So now we got a nice upswing, and actually ahead of non-farm payrolls we do have a positive situation here. So it looks like this correction has ended, and now we're back into the upswing mode. There's a kind of inverse head and shoulder formation with the left shoulder here, head here, and right shoulder here, but that's not the prettiest formation in the world, so I wouldn't be betting on that. And look how great accuracy here was with the correction equality pattern. That's pretty amazing. So if there was no non-farm payrolls today, obviously this signal here will be long. There will be a nice buy signal on euro dollar, but with non-farm payrolls on horizon, which will be published in 21 minutes, it's a lottery. It's a lottery, always entering the market ahead of data. It's lottery. We will see this reaction live, so we will be able to you will be able to see how the market reacts. Cable, you can see the leftover of my position from live trading account, which is a long position here, closed exactly spot on, and that was a very good trade. We also had a trade here on euro dollar also. That was a pretty good trade here as well. Here we can see that the price is creating an inverse head and shoulder formation, so left shoulder head and the right shoulder. As long as we stay below 23.6, there is no buy signal here yet, but a breakout of 23.6 should trigger a buy signal on this pair. And this is another example of a correction equality pattern, which is pretty amazing. This one is a bit deeper, but look at that. This correction was 460 pips, and this correction is 490. So 30 pips difference, which in that length is nothing. So it's not a pharmacy. So it's always more or less the same length. You should give a space. Here, do not place stop loss which is too tight, because it makes no sense. You always need to give a price some space. S&P 500. S&P 500 is doing what was expected from S&P 500, so it's climbing higher. After the V-shaped retracement from the long-term uptrend line, the price is climbing higher. We broke the upper line of the flag, which is at the same time as the neckline, so that's inverse head and shoulder formation. We broke first support, second one, and as I said a few days ago when we are here, the chances that we will hit the new all-time highs are very high, and we're aiming for that just straight. There is no break here, no pause. The price is just climbing higher, and that's beautiful because we are telling that somewhere here that the price will climb significantly higher, and that's what is happening. So the first potential target is test of this horizontal resistance, but we should aim for those highs from the beginning of August. That's S&P 500, and that's New Zealand dollar to American dollar, where we do have this head and shoulder formation, left shoulder, head and right shoulder. Before the breakout, we had this flag, which suggested that as a trend continuation, but this trend, the short-term trend, and it actually happened. So we got a breakout of the lower line of the flag, in the same time the horizontal support, which was a neckline, and the price declined sharply. And now, in my opinion, the potential target for this movement is the black line connecting recent higher lower highs, higher lows, excuse me. If we consider this low, it's higher. If we consider those lows, this one, we have to readjust it, and this line will be a bit lower. So from this, we do have still over 200 pips, 210 pips to this support. So pretty good trade here. That's 200, good. Ahead of the non-farm payrolls, American dollar is a bit weaker. Yesterday on our daily analytical report, the price was trying to break the downtrend line here, but failed and created a false breakout pattern. So actually the price tried to break the downtrend line and a horizontal resistance here, but they were not able to close the price above that resistance, which creates a false breakout pattern. And usually false breakouts are very, very strong trading signals to enter the market with the opposite direction, in the opposite direction. So after the breakout here, the price is advancing, is heading lower. They stopped a little bit on this support. Maybe I will adjust that, yes, on this support, but in general the price should go lower. That would be very good, very decent trading signal, if not non-farm payrolls, because again, in 16 minutes we will find out the non-farm payrolls, and that's a lottery. So without such significant data today, our scenario would be the price going lower, but now it's a lottery. But according to technical analysis, American dollar should be weaker, because usually false breakouts like that are very little and are very strong trading signals to go in the opposite direction. So we had correction equality here, and now I'm going to show you correction equality on gold. So those three rectangles are taken from this one. So this correction was a little bit smaller, and this one is a little bit bigger. But the thing is that we had almost the same three corrections in a row. This one was also, again, do not go only for the correction equality pattern, but here you can see that it was in the same time a bounce from the recent resistance here, and a long-term horizontal support and resistance level, which was actually created in May 2016. Resistance, support, resistance, support, right? So broken resistance became a support. It was positively tested. The price created a V-shaped retracement, and there is a very positive sentiment on gold, and the next potential target for the gold is here, is 1,370 or $80 per ounce, so it's $50-60 higher. And obviously weaker American dollar should help here. So for example, if we are expecting 180,000 non-farm payrolls, a number like 1,036 should be beneficial for gold. And if there was no non-farm payrolls, I would say that there is a strong buy signal on gold. It looks really, really nice. Recently, well, yesterday we went to the highest levels since Trump got elected as a president, so we made new yearly highs. That's pretty significant. That's beautiful. And yesterday candlestick shows a nice power here. If we look on a weekly chart, You can see that we broke the upper line of the wedge, and the price should get there, should get to this resistance here. Euro to Japanese yen, that was our occasion from the trading sniper. If you don't want to trade on the pairs with American dollar, which I totally understand, maybe you could switch your attention to the Euro to Japanese yen, because here uptrend, wedge, breakout, and uptrend, and this midterm uptrend was recently paused by a flag, and the flag is about, we are about to break the upper line of the flag. And also look at that, here flag is kind of left shoulder head and the right shoulder. Do you see similarity here with this a little bit bigger flag on S&P 500 here, left shoulder head and right shoulder, and Euro to Japanese yen, upswing, left shoulder head and right shoulder? Well, I can see a similarity. The price here also defended the horizontal support. In my opinion, the chances that we will break the upper line of this flag is really high. Next one is silver. Silver, I think, finally broke this downtrend line, and the first serious target for this movement should be here, $18.55, $18.60 per ounce. Next instrument is American dollar to Japanese yen, which is in a positive territory, although we are on the relatively low levels. I think that this defense of this horizontal support is pretty significant, and I think it sorts the situation here in the midterm, and after this kind of a hammer here with a long tail on important supports, settles the situation here, and we should see an upswing. Although I'm not a big fan of the upswing here, but I need to read the charts, right? I'm a trader, so I can go long and short in the same time, long or short. So there's no reason for me to stick to one position. So I'm not trying to have my own opinion. I'm trying to respect what the price is trying to tell me. If the price is trying to tell me that it wants to go up, I go long. If the price is trying to tell me that the price wants to go down, I go short. I don't argue with the price. And I'm not trying to force my opinion on the price, because it never works. This market is too huge. American dollar to Canadian dollar, that's a false breakout here. And that's a confirmation that usually false breakouts are really dangerous. Right, so we get a false breakout above the uptrend line here. Once the traders realize that they won't be able to hold this, and that's a false breakout, they started to sell and abandon their long positions, and this is the outcome. When you find out that that was a false resistance, usually that's what's happening. Euro to Australian dollar, after this breakout of this neckline, the price does not want to go up, so I would leave it. I wouldn't try to force the price here to go up. It does not look good. It could look better, but obviously we will see how the situation will develop. But for me, there is no trading signal here anymore. American dollar to Swiss franc is not exciting at all. Australian dollar to American dollar, they defended this horizontal support. That's a good one. That is a good support. If we look a bit closer, yes, it looks perfect. Resistance, support, right? We can even do something like that to adjust it a little bit better. Even just consider those three to be accurate. What it gives us, such a confirmation of the support, it gives us an idea that many traders who bought here, have their stop loss orders below that green area. So a stop loss for a long position is a short position. So if it will happen that we'll have an increased number of selling orders here, and it will drag the price lower, if the price will go even lower and break that support, the movement should accelerate because there are many stop loss orders for those long positions that were there, which creates an opportunity for sellers, for traders trading the breakouts, right? Traders using pending orders. If they have sell stop orders here, there is a potential of making a nice profit here. American dollar to Mexican peso, not exciting at all. It looks kind of positive because we broke this downtrend line here, but we are creating kind of a symmetric triangle. That's not the exciting place to be in. My trading strategy is focused on going with the trend, and we can see that since the middle of July we do not have a trend here, but that's just a sideways trend. British pound to Japanese yen, no trading signal here. American dollar to Polish zloty, you can see that even that political tension around Poland, my local currency is gaining strength, so most probably we're gonna test this it's better on a weekly chart, 352 support. Here there's a big chance that we'll test it, but again we will be influenced by non-farm payrolls, which will be shown in 6 minutes. So before we're gonna do that, I need to show you 4 more instruments, and then we'll watch this live. WTI made a nice reversal yesterday, but they are still below the lower line of the upper line of the wedge. So I would say a firm breakout here should trigger a buy signal on oil, even despite the fact that I'm not a big fan of oil, and for me entering with a long position on oil is very risky. Again, I'm a trader and I have to read what the price is trying to tell me, and here the price is trying to tell me that they want to go up. But there is no buy signal yet. I need to see a H4 candlestick close above that resistance. Euro to British pound, absolutely not exciting on hourly chart. What you can see here is just a big mess. It's a sideways trend, but at the same time we can consider this mess as the right shoulder. So we have a left shoulder head and a right shoulder. Again, that's not the prettiest head and shoulder formation that I have ever seen in my life, but it has potential. And DAX. DAX used this resistance again, showed a bit of weakness. They climbed higher, but they cannot break this resistance here, which is an upper line of the wedge formation. But even if they will break it, it won't change the situation much, because I do believe that the red area here is a strong resistance, not the horizontal red area is a strong resistance here, not the wedge downtrend line. Canadian dollar to Japanese yen, last one before non-farm payrolls released. That's why I love to wait for confirmation, because it was looking bearish. It was looking bearish before because of this false breakout. That was a false breakout above the neckline here. and the price declined, made a flag. A flag is a trend continuation pattern, so we should see a decline, but we were above a trend line. So I said yesterday that okay, there is a selling potential with this arrow as I placed that, but I said that only a breakout here can start a short position here. So don't get too excited too early. Wait for an extra confirmation because it can save you money. And I'm a kind of trader that I wait for a confirmation, which saves me a lot of money and it helps me to be a successful trader. So I prefer to wait for a breakout first. I don't like to enter too early. I want an extra confirmation because the market is as it is, and you sometimes extra confirmation, even if you will lose like 50 pips, is priceless. I would say that is priceless. So you can see here that the price broke the resistance here, dynamic and a horizontal one, and is aiming higher instead of breaking the this trend line. Okay guys, so that's the situation. Now we'll try to see the situation live. I say that I want to see euro dollar, I want to see gold, I want to see S&P 500, I want to see oil, DAX no. Let's do it like that. I want to see American dollar to Canadian dollar. Oh, and euro to Japanese yen, because I was telling that it's a good opportunity if you want to avoid non-farm payrolls. Yes, that's a good combination of instruments. 1 minute to the data. We have time. Time is money, so we have money. Okay, that's gold, and that's oil. We do have euro dollar on the top left, S&P 500 bottom left, and center we do have euro to American dollar to Canadian dollar, euro to Japanese yen, and right corner top right we do have oil and gold on the bottom right, and half an hour to the data. If there are any beginners here, you will see why non-farm payrolls is a feast for the traders, because you will see some nice movements here, especially if there is a miss from expectations. Choppy trading few seconds before, as always. And now release the demons. Much weaker than expected, probably number, because American dollar is weaker, much weaker. You can see it affects gold. Gold most probably will make new highs. Euro dollar is climbing higher like a madman. American dollar to Canadian dollar is breaking the support. That's pretty exciting to see that. Gold is making new yearly highs. And I do have a long position on gold, so I'm extra happy with that. So most probably the number was very bad. Non-farm payrolls were much weaker than expected, probably. We will see. Oh, that's I'm sorry, I refreshed the next week. I want to see what happened today. If you compare the movements of euro dollar, for example, or American dollar to Canadian dollar or gold, you can see that really euro to Japanese yen was a good peak, because the volatility wasn't so big as, for example, on those instruments. So yes, non-farm payrolls 156. Hourly earnings dropped. Unemployment rate went higher. Participation rate didn't change much. But yes, in general, that's data which was weaker than expected, so we shouldn't be surprised that the American dollar is losing. So most probably we won't get interest rise. That's why traders are abandoning American dollar. I'm extra happy to see this gold climbing higher. Let me also see my local currency. Yes, much stronger. Okay, fair enough. Thanks very much, guys, for watching daily analytical report. I'm happy that we were together watching non-farm payrolls. That's a great lesson for everybody. I'm happy that gold went higher because, as I said, on live trading account I have a long position there, which I will show you on Friday on a live trading session. I will explain you why I opened that, but you know, and we will see how it will finish, because I opened position somewhere here. It's already protected on profit here below those lows. Thanks very much, guys. If you want more trading occasions, visit our Twitter account and our website alpari.news.